What is the ICT Market Maker Model and how do we trade it? The Market Maker Model is a blueprint as to how price will behave moving from bullish PD arrays to bearish PD arrays. Having an idea of price movement will allow us to enter precise trades with tight stop losses. Basically, what this means is that if we use this trading model correctly, then we'll be able to catch trades with high risk to reward ratios. I'll be explaining that in a moment. But firstly, for you to understand this trading model in the easiest way possible is if you'd imagine the market as a circle, right? The lower side of the circle is considered as the market maker buy model. The upper half or the higher half of the circle is considered the market maker sell model, right? On the market maker sell model, we enter on the smart money reversal and target the original consolidation. We enter on the highest point of the circle and target the midpoint of the circle, the original consolidation. And in a market maker buy model, we enter at the smart money reversal and exit at the consolidation point. And if you're wondering what the consolidation, the distribution, the smart money reversal, the accumulation stands for, I'll be explaining that in a bit. Enter at the bottom, enter at the top, and target the midpoint. Alright? The key elements. Question: what is a higher time frame PD array? PD array are premium and discount arrays. It is a collective word used to describe areas on charts from where you can see a reversal in price. The reversal could be short-term or long, depending on the time frame of the PD array. So according to my experience with ICT, there are three high probability PD array types. The first PD array is the FVGs, the buy side imbalance, sell side inefficiency, and the sell side imbalance, buy side inefficiency. The BC and the CB. We have a BC right here and we have the CB right here. So that is the first PD array. The second PD array, we have the order blocks, the breakers and the mitigation blocks. And we have the liquidity, the buy side liquidity and the sell side liquidity, as you can see in the illustrations. And in this video, we're not going to cover the individual PD arrays because that is not the purpose of this video. We're focusing on the market maker model, right? So I want you to focus on these three PD arrays: the FVGs, the order blocks, and the liquidity. So moving from here, phases. We have 4 phases, 2 of which are just opposing concepts. Alright? What is the original consolidation? This is the first stage of the market maker model. It is basically the draw on liquidity area you mark as your take profit zone. So this is the beginning of the move that we're looking to capitalize on. Second stage, accumulation. In a buy setup, the second stage would be the distribution. In the sell setup, the second stage would be the accumulation, right? So you would interchange the accumulation and the distribution. So accumulation, buy orders are being accumulated here so that when the time is right, price can expand above the original consolidation after a liquidity sweep. Accumulation, distribution, right? Distribution, this is the complete opposite of accumulation, as sell orders are being accumulated here and then expansion occurs to the downside after a liquidity sweep. So orders are being accumulated during distribution, and then once we have a liquidity sweep above the distribution, once we have a liquidity sweep, then we know price is ready to drop into the smart money reversal or the higher time frame PD array. So I'm going to get to the higher time frame PD array in a minute, but I need you to understand the terminologies first, right? So smart money reversal right here, the smart money reversal, this is the inflection point, meaning this is the turning point. This is where price turns from a downtrend to an uptrend, or from an uptrend to a downtrend, right? This is the inflection point, and price reacts on a higher time frame PD array here. Do you remember the PD arrays I was showing you? The FVGs, the order blocks, and the liquidity. This is the inflection point, and price reacts on a higher time frame PD array here. So since we have two time frames, right? The first time frame is the higher time frame. On the higher time frame, we look for a PD array. So imagine on the higher time frame we have a PD array here, and then on the lower time frame we look for market maker model, right? And I'll show you that in an example in a second. You can either enter at the exact liquidity sweep down here or up here for a better risk to reward, or wait for a confirmed low risk entry, meaning accumulation or distribution, right? So in a buy setup, what I was explaining earlier about PD arrays. So this is the market maker buy model. The first thing we look for is a higher time frame market structure, and it should be bullish in a buy model. Higher time frame market structure should be bullish. We have a bullish market structure on the higher time frame. Second point, next draw on liquidity or daily bias should be pointing higher. We have this weekly fair value gap in here, and we have this buy side liquidity up here. So imagine price was here before the white candle. The third step is that there should be a sell program on the lower time frame prior to the higher time frame PD array. So prior to price coming into this weekly fair value gap, we need to have a sell program on the lower time frame for us to support our buy model, right? When we look at this price action right here, you can see the weekly fair value gap is that fair value gap where the original consolidation begins from. That is our buy side liquidity, and that is the buy side liquidity that you see marked there. That is this buy side liquidity right here, right? When this candle crossed above the buy side liquidity, that was price crossing above buy side liquidity here. So we have the original consolidation right there. We have the first leg of distribution. We didn't have second distribution, we just have the first one. So original consolidation right there. We have the distribution right here. Price comes down into the weekly fair value gap. We have a market structure shift right here, and that is the smart money reversal, right? So once we have a market structure shift, price trickles down into this fair value gap, and it reacts aggressively, as you can see. And as it reacts, we have the accumulation phase, and after the accumulation phase, we take out the buy side liquidity, which is the beginning of the original consolidation. And I'm going to show you another example. Same thing, the things we look for. We look for a higher time frame market structure, which should be bearish. Price is bearish. The next draw on liquidity or daily bias should be pointing lower. So we have a fair value gap in there. Price climbs higher into that fair value gap, right? That weekly fair value gap. And the third step is that there should be a buy program on the lower time frame prior to the higher time frame PD array. So we have a buy program right there, which is this buy program right here, right? So we have an original consolidation right here, and we have a sell side liquidity right there, which is this sell side liquidity right here, and price is in the buy program going to the weekly fair value gap, which is this fair value gap, and in that fair value gap we have the smart money reversal. Once we have the smart money reversal, we have the market structure shift, and after the market structure shift we have a displacement to the downside, first leg distribution right here, another displacement, second leg distribution, and finally we take out the sell side liquidity, which is the beginning of the original consolidation, right? So it is easy to understand. I'm going to show you how to execute it on a real price chart. Subscribe. So this is EURUSD, and I'm going to show you exactly how to. Let's look at this price action right here. So on the 4-hour price broke structure right here, right? So we had a market structure shift right here, and we have an order block in here. Once we have this order block in there, we also mark our buy side liquidity, which is right there, right? There's our buy side liquidity right there. Our higher time frame is the 4-hour time frame, and our lower time frame is the 15-minute time frame. So on the 4-hour, we mark our order block, go down to the 15-minute, and look for a sell program of a market maker model. Alright, on the 15-minute we can see we have original consolidation right here. We have our first leg distribution right here, second leg distribution right here, then we have our smart money reversal, and I'm going to explain why in a second. Have our first leg accumulation right there, and our second leg accumulation right there. So the 4-hour PD array is the order block, this line right here, and that is where we have our smart money reversal, right? We had a market structure right there, first market structure right there, and we have a fair value gap right there, but as you can see, price never came back down, right? Then we have this break of structure right here, and once we had that break of structure, we have this inverse fair value gap in here, and this inverse fair value gap is where price retested before buying higher. So you could have used this as your entry within the smart money reversal. If you missed this entry right here, you could wait for the accumulation phase. And how would you know where the accumulation phase is going to, how low it's going to go, right? So right on the 15-minute, we can see we have our break of structure right here, and below that break of structure we have this fair value gap in here. We have the fair value gap in here, and that is where price reacted from, right? So that is your second entry. Of course, you put in your stop loss right here, so it would look something like this. Put your entry right there, stop loss below the low in the area, target the original consolidation or the buy side liquidity right there. Do you see that? Or if you couldn't see the 15-minute fair value gap in here, you could go back to the 4-hour and see if there's a PD array of interest where you could base your entry from. So on the 4-hour, we have the breaker block, this level right there. So once you identify that you have a breaker block in there, and you expect the accumulation phase to take place within that level or within that zone, you go down to the 15-minute and look for an entry or wait for an entry to go long and target the original consolidation.
And remember, in Forex we're talking about, we came in this game for money. We came in this game to earn a living. So we are not here to play games.